the numbers we had there was $1.2 billion NPV post-tax, 45% IRR, and then also of the lowest CapEx and OpEx numbers. CapEx $200 million, which comparatively speaking to some of the other aspirants are the lowest.
Welcome viewers tuning into Assay TV. We're here at the Mining Indaba and I'm joined by Vanadium Resources Executive Chairman Jurie Wessels, who's here with me today. Jurie, welcome.
Thank you very much for having me.
Yep, so Vanadium Resources, you're an ASX listed junior developer focusing on a tier 1 asset at the Steelpoortdrift Vanadium mining project in Limpopo. Could you give us an overview of the project? And I understand that the Steelpoortdrift is probably one of the largest vanadium resources in the world. So for the viewers, could you put it into situation for us?
Yes, you're right. It's in the Limpopo region, located in the Eastern Bushveld complex, which is part of the entire Bushveld complex, which is that magnificent mineral endowment, well known for minerals, including vanadium, of course, has been mined. Vanadium has been mined, that is, in the Bushveld complex for many years, many decades, and the project is 662 million tons in resource. We have a reserve of 75 million tons. That reserve is only 12% of the resource. Which will allow us then to produce 12,500 tons of vanadium pentoxide, ramping it up to 18,500 tons per vanadium pentoxide per annum. We're conducting a DFS presently. We fully funded to final investment decision, and the DFS is hopefully going to repeat the numbers that we had with the PFS. We don't have any reason to believe that it won't. The numbers we had there was $1.2 billion NPV post-tax, 45% IRR, and then also of the lowest CapEx and OpEx numbers. CapEx $200 million, which comparatively speaking to some of the other aspirants are the lowest. Then the OpEx number is $3.08. Putting that in perspective with vanadium pentoxide price per pound, which is now $10.40, you can see there's a lot of space, headspace for surviving and weathering the storms. That price that is of $3.08 of OpEx cost is what we can see is the lowest at this stage in the market, and it's all related to a number of things. There are three factors that's important. The one is the ore body. It's flat dipping, 10 degrees, gently dipping ore body. The 75 million tons, 25-year life of mine, stripping ratio is 1:1, which probably the lowest in the industry. And then it also upgrades magnificently to a higher grade concentrate. Second only to Largo's project in Brazil, right, at 2.2%. And what it does mean is that we do get about a third more product out by using the same amount of energy than anybody else would. And then secondly, we're using the salt roast process. That's the second factor that contributes to those good numbers. The salt roast process has been used elsewhere in the world and in South Africa for many, many decades, has been optimized in South Africa. I would say even that South Africa is an intellectual property exporter of the technology, really, getting that conveyed into other quarters of the world, and that has then come to a situation where 90% of what we will be using as equipment comes from South Africa. That's got cost benefits as well.
Excellent.
And then the third element is that we're really at the, and that's sometimes not seen as a benefit for some reason, but South Africa and where this project is located allows us to have all the infrastructure that we need.
Okay.
We don't need to go and build gas pipelines.
Yep.
We don't need to go and put in water pipelines. We don't need to put in tarred roads. We don't need to go and building mine site camps, accommodation, anything like that. We're in the bushveld complex, Eastern Bushveld Complex, where there's 32 mines, and that helps a lot to bring those numbers to those levels that we're talking of.
Yeah, absolutely, and presumably skills and expertise as well locally.
Absolutely,
Yep.
precisely because of the location. We have a big pool of expertise to draw from.
I want to just scale back and talk about the PFS that you mentioned. What price did you use when you were working with the PFS?
We used a price of $9.03.
Okay, so quite
that's
conservative.
That's a 15-year look back average from June last year when we did the PFS. We probably would use the same mechanism to get to the DFS. There's a lot of optimism in the market about vanadium, vanadium price, etc. We'd probably be a bit more conservative, simply because we don't have to make the project look good by putting up a higher price.
Right.
It still looks good even at $7. But of course, we will be realistic. We will be using a number that's defendable.
Yes, certainly. Okay, very good. And yeah, thinking about the definitive feasibility study, the DFS.
The DFS.
What are your stepping stones to get to that? You know, you talked about that, but do you have more of a roadmap in place of how you can get that?
We have. We expecting that to finalize in September. Started with it already last year in October, after we did a placement at a premium to a South African mining services group, an infrastructure development company called Raubex Group Limited. They are listed on the JSE, and that enabled us to complete the DFS, at least have the funds to complete the DFS. That's expected in September. And some milestones that could be coming up, pointing towards that is a revised reserve also added to that, maybe just also giving more color on to what the future would look like after the 25 years. Because we, as I mentioned, we're only using 12% of the resource. And we would be then putting out some more information on the life of mine on open pit designs, and I'm expecting more than 100 years, as the extreme of that. And then of course, depending on how you scale it, then there could be smaller sizes as well. So the DFS is chugging along. We are at this stage not seeing anything that's deviating from what we saw at the PFS. We are relying on, as I mentioned in the beginning of the conversation, on a lot of expertise in South Africa. That expertise is accurate. They know what they're doing, and we don't expect any bumps in the road. On the DFS, that is.
Hope so. So let's talk about your conversations with investors. You know, we're back here at Mining Double. We've had the one-to-one. Is the positive sentiment around vanadium and its usage in energy storage driving people towards you? Is your phone ringing more than it was a few years ago because of the energy transition narrative? Correct.
Yeah, we were virtually booked out at the one-to-one. I think we only had 2 or 3 meetings of the 50 or so that was not taken, and the sentiment is clearly in favor of vanadium, particularly the role it will play in making sure that this world actually do become independent of fossil fuels. Well, not completely. That's not, but at some point, definitely getting there. As is. The aspirations of the governments and some of the companies as well. So from a battery point of view, if there's anything that stands out that would be making it's vanadium, due to its oxidative states, can change from V2O5, 4, 3, 2 and back again.
Right.
It's more safe. It's safer than lithium. Of course, it's cheaper at this stage than lithium, and it just allows for so much more on grid scale, and that is where the optimism lies. Is if the renewable energy is going to be used, it needs to be stored.
Yeah, absolutely.
And what's the best way of doing that? And we believe it's vanadium redox flow, and that's already showing on the demand for that. From that perspective, at this stage, it's anything between 3 and 5% of demand of vanadium production. So it could be going in. Some are projecting up to 25% of the supply. And that would obviously put a huge amount of pressure on the price of vanadium pentoxide, and bodes well for the industry generally.
Yeah, absolutely. That's clearly the growth segment of the sector, but of course still a huge application on the industrial side.
Absolutely, as well. In steel, where its bedrock of application lies, and then also in alloys, which is now more a novel way of looking at vanadium as well, in steel alloys, specialty steels. But if you just look at its conventional, traditional role, the world would need another mine or two just for steel. And if you compare and look at all the aspirational guys out there, compare it with what current capacity is on the existing producers, then you would quickly conclude that there needs to be another mine. And which one would it be? It would be the one that's the cheapest to build, would be the one that can weather the storms, and that's built in a jurisdiction that's shown to be able to do it.
Yes.
So that's where we come in.
Yeah, that's the USP indeed. But what about yourself, Jurie? Because you're on the buy side before. You're assessing a lot of these companies.
Yeah.
Other than just knowing vanadium resources very well, what made you pick vanadium, and what made you move into leading a corporate?
It was actually a bit more by chance than anything else. There was a change in the regulatory regime in 2004 in South Africa. That allowed one to then apply for licenses where the majors did not retain their interests. Or just moved on, and that's where this license fits in. At that stage, it was purely vanadium redox flow was not on the horizon.
No,
it was just for steel, and I'm an explorer at heart. But what attracted me to it then, more so later on, was the prospect of it getting traction on what was already evident in 2010, 11, 12, that the world would go in a direction of being more independent from fossil fuels.
Certainly. Interesting. Okay, so you've increased ownership of the project. Can we talk about the sort of structuring there as well?
The VR8 or Vanadium Resources owns 73.95, 74% for all practical intents and purposes of the project. 26% is locally owned, so-called BEE, and we would want to acquire more on the premise of the once empowered, always empowered principle, thereby also offering our BE shareholders the same exposure to the capital markets in Australia than we have and everybody else has. But that still might be way in the future, not knowing yet how that could come to the fore.
And just for the viewers then, the sort of key milestone this year that you're really working towards is that DFS September.
That's one. The other one is getting the right mix of people involved to get the construction funding going. Of course, one doesn't really put your signature on the dotted line until the DFS is done. When you're a supplier of bank finance or other forms of funding, but we will be developing relationships with the right people. That's from offtakes, principal funding, other forms of funding as well. to make sure that once we have the DFS done, we don't have to scramble around and try and put something together. And so that's another focus as well. And then also really looking at the downstream benefits of vanadium, not aimed at the steel market, but at vanadium redox flow.
Yes.
Because we're the lowest cost producer, we have a lot of space to tie up with vanadium redox flow producers and have sight into the future beyond the price that we would have had, we would have received. For instance, if one uses a $10 price for vanadium redox flow, vanadium pentoxide, but you would get an uplift on a see-through basis of $15 by tying up with a vanadium redox flow company. That has got benefits in itself. So what does it mean is that the vanadium redox flow company would then acquire vanadium at a very competitive price, and then be able then to advance its business in competition with whoever else is out there, and then we would see the uplift as well.
Yep, certainly. And it's part of this narrative across mining more generally, particularly in the battery and energy metals space of getting closer with the downstream elements and then speaking with mining.
Or doing what Largo is doing now. They're actually doing something that's very wise.
Excellent. Very good. Well, Jurie, thanks for the insights. It's been fantastic to catch up with Vanadium Resources and get an update, and thanks for speaking with Assay TV viewers.
Thank you.